Hello and welcome to another Small Gold live stream. Today is Wednesday, September 19, 2018. Tonight's topic is silver an inflation hedge or a speculative metal? This is an open discussion. I have a bunch of data and charts to look at and we can discuss that. First, let's look at what silver did today. Decent day, closed at 1423. Opened the day around 1416, had a bit of a spike to 1430 around noon, and fell back, but held its gains of the day. Gold also was up to about 1203, peaked at about 1205, started the day just around 1200. So both had a decent day. Silver's rise, while it was, I wouldn't say impressive, while it was good, it was pretty much what the Dow did today and somewhat does almost every day. The Dow closed at 26,405. That's up 158 points. NASDAQ was down. There was some medical marijuana or Canadian marijuana stock that went nuts today. I forgot the name of it. S&P 500 up 3.64%. Daily news. Let's see. They're still back and forth on the Kavanaugh confirmation hearings, whether the accuser is going to testify or not, or whether they're going to go ahead and hold the vote. So that's up in the air. I think that's about it for the day. Nothing else jumps out at me at the moment. All right, so what I want to do now is to go through some charts here. And one of the things, the reason I want to do this is because a lot of people who are interested in silver stackers, they're always telling me it's going to the moon, and they're always thinking price appreciation. And we did a live stream on gold, whether it was money, a hedge against inflation, insurance, and we pretty much determined that it may be an asset, it may be an appreciating asset, but it's not going to go skyrocketing. But yet you hear all the time these commentators always telling you silver set to skyrocket, this is going to happen, JP Morgan's going to do this, JP Morgan has silver, commercials are net short, commercials are net long, whatever it is, and it's always set to skyrocket. It's something about shortage or COMEX default or whatever it is that is going to send the price, quote, skyrocketing. Now that's an issue because it really only goes skyrocketing historically every 30 years. So let's just take a look at some charts that I've prepared for this, and we'll see that. Well, we're also going to take a look at silver in terms of inflation. But first, just look at it from raw pricing. Then we're going to look at some historical inflation numbers, CPI numbers, silver versus gasoline, silver versus a whole bunch of different metrics. But first, let's just take a look at the price of silver. You might have seen this chart before. Since 1900, somewhat of a long-term chart. And you'll see that there is a bunch of spikes and then long periods of time where it basically doesn't do anything at all. Now, the price not doing anything at all is somewhat comforting if you're looking not to have inflation, because it means that it's holding its price versus the currency. But if the currency itself is losing value, then you're actually losing value if the price of silver remains at the same price of the currency. Meaning, if it is at $3 or $4 per ounce for 10 years and the value of the dollar is declining during those 10 years, the fact that it's $3 or $4 an ounce means you're not really staying ahead of inflation. Now, you have to smooth that out. If at times it jumps from $7 or $8 an ounce to $50 an ounce, well, you're clearly ahead of inflation when it gets to $50 an ounce. But then the question is, when it drops back down and then it just hangs out at $17 an ounce for 10 years, which it's pretty much done now, are you really staying ahead of inflation? Now, is it a 5-year game, a 10-year game, 50-year game, a 100-year game. Now, we've seen with gold, over time, even in a 5 or 10 or 20-year period, a shorter period of time, you tend to get your, even against the dollar, you tend to get your at least maintenance of value against the dollar. If you look at gold over the past 100 years, you clearly have come out ahead against the dollar, and even sometimes, some years against the Dow Jones. Silver, not so much. But let's take a look at now some more data and some more charts. And then we're going to look at junk silver. We're going to look at the prices today. We're going to look at Morgan silver dollars. There's quite a bit of information here. And then I want to figure out what you guys think and why you actually have silver. Is it because you want it for price appreciation, or you think that it is a good way of preserving wealth? Or do you think it's a hybrid of the two, that you can preserve your wealth and also get that speculative pop? Well, let's take a look now at this is a 10-year chart. I just want to bring it a little closer here to home. We looked at the long-term chart. You see those spikes on the long-term chart. And in the 10-year chart, you're going to see the one spike. You're going to see that 2011 spike. And then you're going to see, you know, had you bought between 2011 and 2012, you would have been averaging in the $25, $35 range, even if you bought at 50. And then you see you would have lost for the next, since 2013, you wouldn't have made any money back. You'd be down 35, 40%. Now, clearly, that is not a store of value there. And now, if you bought in 2015 to 2016 and through today, you would say you're breaking even, maybe a little ahead, and maybe you're preserving your wealth. You're probably down 7-8%. So it looks like, I think, if you bought at any point in the last 10 years, if you just look at that line there, the only thing you possibly could have done of any positive value is really benefited from that spike. That would be your big claim to fame, that you had silver and you got a spike and you dumped it. If you bought it most of the other times, you didn't really make out okay during the last 10 years. You really did not beat inflation. Forget the opportunity cost you might have had in stocks or something else. You did not preserve your wealth. In fact, you lost your wealth. Now, some would argue you can't lose wealth in silver because you still have the silver ounces. That's fine if that's how you measure your wealth, meaning how you measure your ability to buy goods and services, which no one does in the, I wouldn't say the real world, but I mean is there isn't a vigorous global market where you can buy goods and services with silver. So if you may have the same amount of ounces that you bought, but they're worth less in fiat dollars. Now, you can say, well, if I was in Venezuela or Iraq or Iran or Turkey, but chances are you're listening to this, you're not. So, and that's true with anything. If you had gold in those countries, if you had dollars in those countries, if you had whiskey in those countries, they'd also be worth more. So we're going to stick to, and since the dollar is how a lot of commodities are priced globally, and how many of you listening to this conduct transactions. Now, I know we have people from Australia, Europe, England, Africa, some from the out in China, Japan, but still, you still can think in terms of dollars. All right, let's take a look now at some inflation numbers, and then we're going to compare that to what's going on. So let's look now at 1979. You say, well, the last 10 years, you know, we really can't really just use that. We need to look further back and take a look. Although I would argue, if at any point in history, this should have been a time for silver to have risen. I hope you would agree with that. We've had the unprecedented debt, not just in the U.S., but then the follow-on massive increases in debt in China, European Union, Japan, all over the world, QEs, low interest rates, and yet we don't have that big move up in silver. And even the gold, I'd say, is disappointed given the amount of credit creation. All right, let's take a look at 1979. Now, one thing that people look at is the house. A lot of people try to say, house is a good investment. Not really. Because first of all, the house you live in isn't an investment. Nor is the car that you buy. That's not an investment. We talked about whether even gold was an investment. We said gold shares, mining shares are an investment because you're not making any income off your house or your car or your gold. And there's nothing that can be done to make the gold worth more. You really can't make your car worth more. It depreciates every day. And to a certain extent, you can't really make your house worth much more. It's pretty much subject to the dictates of interest rates, your neighbors, tax rates, and maybe you can put in a pool. Maybe you can fix the land up a bit. But generally, there's not much you can do to boost the price of your house. Now, the average house in 1979 was $71,800. You say, oh, well, if I held a house since 1980 or so, it'd be worth $230 today. It's a nice 223% increase. Well, yeah, but that doesn't include the taxes you would have spent over the 38-year period, a 28-year period, or repairs and maintenance that you would have put in. I would say after you did all that, you might make a few percentage points a year, which isn't bad. But then, of course, you'd have to deduct your mortgage, and if your mortgage is a few percentage rates a year, then it's all a wash. Now, you can say a house is for savings. That's fine. But unless you're in one of those ridiculously skewed markets like San Francisco, Vancouver, London, New York, generally your house is just an asset. And it's an asset that costs you time, money, and effort to maintain. Now, gallon of gas, I like gallon of gas the most because it's something that most people can't afford because you have to drive, and if you don't have to drive, maybe you have to heat your home. There's generally, most people are involved somehow in the price of energy, at least, and a gallon of gas is a good benchmark. Now, a gallon of gas in 1979 was only 86 cents, and I remember, in the early 70s, it was like a quarter, 30 cents, and then they had the two oil shocks of 72, 73, where they said the Arabs were not, they were an oil embargo, and then the prices went up. I remember it was 75 cents. It was such a huge deal. And now, it was 86 cents in 1979. And today, it's about $3.42. Now, that's a 300% increase. Now, the problem with gas is you can't really store gas for that long. It does degrade. If anyone knows who ever kept gas in their garage for a couple of years, it doesn't work. And you could buy gas, I suppose, through contracts. But you'd have a lot of effort, trading costs. You'd keep rolling it over. But if you just went long gas, since 1979... I don't know anyone who's done that, you would make about 300%. Now, a dozen eggs, not too bad, up about 135%, 85 cents in 1979, and dozen eggs in 2018, about $2. And that's about an estimate. You can go here or there on that one. I think there's a lot more chicken farms, and anyway, 135% increase. A gallon of milk, about 120% increase. First class stamp, here's the government rationing up the price of a stamp, even though fewer people use it now. Post office costs a 233% increase. Used to cost 15 cents for a stamp, now it costs 50 cents for a first class stamp. Now, 1979, the average price of silver was $11.09. Now, it went higher that year, but this is just the average price of silver that year. And right now, it's at $14.23. That is a 28% increase. And how many years are we talking about there? 28 years. That's a 1% gain per year. And inflation rate each year since 1979 has been far greater than 1% a year. So you've gained 28% if you bought silver in 1979 at $11.09. Now, it's possible you paid less. This is the average price because you might have bought in as the price was rising towards $25.30 at the end of the year. But you definitely, if you bought in 1979, you are behind. You have a 28% gain in nominal US dollars, but the inflation rate compounded since 1979 is far greater than 1% a year. Gold, however, you could have average purchased gold, even with the big increase in 1979, at $306, And today, even with the price drop in this year over $100, it's at 1203, and that is a 293% gain. So if you look at the difference in price of gold and silver in 28 years, you've got a 10-fold increase in the price of gold versus silver. And we're also going to see, well, before I go to 1980, let me just show you a gold-silver ratio chart for the last 5 years. Now, many of you over the last 5 years have been touting the gold-silver ratio as why silver is undervalued and silver is going to the moon, and the gold-silver ratio proves it. It's got to go to 16 to 1, 1 to 1, all types of nonsense. Well, since the last 5 years, silver has lost gold has risen 42% versus the price of silver. 42% gain. It's gone from about 58 to 1 all the way up to 84 to 1. Now, a lot of people just insist, well, that just means it's going to go lower. No, it doesn't. We've talked about this before in that there are different reasons for people to buy gold and silver, and gold appears to be the more attractive metal, at least on the preservation of wealth and on the inflation hedge side. Not just today, but looks like that over the last 100 years. There's really nothing on the horizon to make that change. In fact, I would argue it's going the other direction. Gold is still a monetary metal held by banks. Turkey just sold some gold to buttress their finances. Venezuela, all the central banks, they still hoard gold. Russia may have some silver, but silver is not the metal of choice for people preserving wealth. And there's a reason for it. It has not shown to be a good inflation hedge. It's shown on occasion to give you that really spectacular spike, but there's a lot of stuff like marijuana stocks that'll give you that once in a lifetime spike that lasts a week, or cryptocurrencies may do the same. Oh, by the way, cryptocurrencies, they were slightly up today. Bitcoin was up to 6,400, Bitcoin Cash 430, Ethereum about 210, and Litecoin $54. But now let's look now at the 1980 silver price and the 1980 gold price and inflation and all that kind of stuff. We just looked at 1979, but now let's look at 1980. Now the price of the homes, there was a really rapid period of inflation from the 70s all the way through to about 1982, when finally those high interest rates that Volcker put in broke the inflation, and then you had Morning in America with Reagan in 1984. But in 1980, you can see there's been an increase, $5,000 for a new home. That was a pretty big increase, and not because people were getting richer, it was just because of general inflation. So if you bought a home then, you held on to it, it's a 203% increase, but again, not including repairs, maintenance, and taxes that you would have paid through the holding period of that house. Gallon of gas, you saw, it was under $1. It's $1.25 now in 1980. Today it's about $3.42. Still a 217% gain. Dozen eggs almost reached $1 at that point. They're about $2 now, 118% gain. Gallon of milk then broke $2, but still 65% gain. Now there are efficiencies in farming that do help keep the prices of livestock and other commodities down. Not so much beef, but perhaps chicken, eggs, and things like that. Although the price of chicken has skyrocketed, but not so much eggs. First class stamp, you can see the same increase, 233. But now let's take a look at silver. In 1980, now granted you had the $50 price in, I think it was March or April, Silver Monday or whatever it was, when it reached $50. But over the course of the year, the average price was $20.63, and right now it's $14.23. So as we saw, if you bought in 1979, you had a 28% gain. Well, if you bought 1980 on the average price, you lost 31%. Now, unless you managed to sell again at 50 in 2011, and there weren't many opportunities to sell over $20 since 1980. We're going to go back and take a look. You had no chance from 1980 to 2008 to sell over $50. We're going to take a look at that in a second. So you got a 31% loss. And gold, even if you managed to pick up your gold at $615, the average price in 1980, it's still $12.03. You've got about a double. You've got about 100% gain. You're definitely ahead of inflation there. in many instances. Not for gas, though. Gas has gone up higher than that. But for many items, you may be ahead of the game depending on when you bought. But let's go back now and look at that $20 average price if you picked it up in 1980 and you wanted to buy. Actually, I'm going to give you this one while I search out a better one. Let me give you that there. Well, you can kind of see it on this one. I don't have to pull up another one. If you look at the price in 1980 up around $50, then the price slid down to the single digits. You don't get a $20 price again until about 2009. You see? And then the 2009, you go back up to $50. And the last time you've seen $20 is... You saw it briefly almost in 2016. Before that, you saw it in 2013. And then it's been down, 2014. It's been down ever since. So, not a very good outlook. Well, not outlook. Look back on the price of silver. Either recently or even over the last 30 years. And again, if you go back 100 years, you only see those 2 or 3 spikes, the real 2 big ones, over the last 30 years. All right, now let's look at it another way. I want to look at the Consumer Price Index. First thing I'm going to look at and show for you is the Consumer Price Index of $1 going back to 1932. So let's take a look at that. I'm going to explain why I'm using 1932. This is from the CPI inflation calendar from the U.S. Department of Bureau of Labor Statistics. And this one requires some, this is where we get some discussion going. The silver dimes in the United States have been at the same size, purity, and silver content since 1873. So the last time they made a silver dime with silver in 1964, dated, it was about, what was it? It was 250 grams. It had 0.07234 ounces of silver, and it was that size. Prior to 1873, they made them in a little smaller. They made them sometimes with a little more silver, sometimes with 89% instead of 90%. But let's just forget that. But here's the point to take away from that. Since 1873, from 1873 to 1964, a dime was a dime was a dime, was the same size, and it had the same amount of silver. So one could argue that a dime was more valuable in 1873 than 1964, assuming there was inflation during that time period, and there was. Meaning that they never added any more silver to the dime to make the dime worth more. It was always 0.07234 ounces. The quarter, same thing. All of them in 1873, they looked like they standardized the size from then forward. And then you had the Barber quarters and the Standing Liberty quarters, and you had the Barber dimes, and then you had the Mercury dimes and the Roosevelt dimes. You see the progression since 1873 right up until the 1964. And the same with the half dollars. They had 0.36169. Now, silver dime, so if you added up $1's worth of silver, you got about 70.72 ounces of silver. You didn't get it, so it's an off number. Now today, a dime is worth in silver value about $1.02. A quarter is worth about $2.56. And that's about $3.57, and that's about what a gallon of gas cost. So if you look at it from 1964, you could say, okay, I've got those. If I held silver in that form since then, I could buy a gallon of gas then. I can buy a gallon of gas now. Pretty much. All right, but let's go back to 1932, because this is instructive. So $1, if you had $1 in 1932, that would be, according to the U.S. government, which means that it's probably understated, that would have the same buying power of about $17, $18. Okay, so it's a pretty big deal. But let's move forward to 1964, which is... Now remember, the dime is still a dime. And if you had 10 dimes back then, or $1 back then. Today they would buy you $17.63. But look what happens by 1964 when you have $1. It goes from $17.63 to $8.16. So it's cut in half the value. I don't know if you're seeing that on your screen there. There it is, $8.16. So that means that the dime, the 10 cents, depreciated by more than half, but yet there was still the same amount of silver in the dime, in the quarter, in the half dollar. So the silver content never changed. Just another interesting thing is that the gold price from 1934 to 1974 was fixed at $35. So that didn't move. So there is an element here that the prices of gold and silver didn't really move. Now the price of silver did move between 1873 and 1964. It's just that they try to maintain some type of bimetallic ratio where the silver coins just never added more silver to the coin. They didn't make the coin bigger, and it was still 10 cents. So the 10 cents itself took the hit on inflation, and instead of being worth today's equivalent of $17.63 in 1932, it would only be worth $8.16 by 1964. Now, what does that mean? Let's take a look now. Let's assume you're starting your silver store of value in 1964. You're one of the smart ones. Lyndon Johnson comes out and he says, we're going to take the silver out of the coins and there'll be no profit from hoarding them there silver coins. And we advise you not to do that. If anyone does that, we have and will use our silver hoard to flood the market to ensure you make no profit. Now, that may be a fake imitation, but that is a real statement. Lyndon Johnson did say that when they signed the Coinage Act of 1965, removing the silver from the coins, that basically he was saying a quarter is a quarter, whether it's got silver in it or not, and don't think about hoarding those silver quarters, because at the time they had a strategic stockpile, and they said we'll keep the price of silver down, so you're not going to benefit from getting the silver out of those coins out of circulation. People did it anyway, but all right. So let's now look at what would happen. Let's say you had $5 worth of silver, right? $5 worth of silver. No, let's say you had $10 worth of silver. Okay. So you have $10 worth of silver. And let's say you hold those $10 worth of silver in 2 rolls of $5. So you've got a $5 roll and a $5 roll. You have $81.60, or let's just say you have 1 roll of silver. Today that'd be worth about $40, okay? And 2 rolls be worth about $81. Well, let's take a look. If any of you guys collect junk silver, SD Bullion right now is selling a $10 face bag of silver at $107. Now we saw that that $10 of silver in that form is worth today about $81 in purchasing power, and today one could argue, well, $10 worth of face value in dimes is worth $107. So you have gone ahead of inflation, because instead of it being worth about $81, it's worth about $107. Now, SD Bullion's not going to sell you, is not going to buy your silver for $107, but you might be able to sell it for $107 on eBay, or you might be able to, or maybe it's $102, whatever it is that they'll pay for it. I don't know what they'll pay for it, but it's more than the $81. So in that sense, if you had kept your $10 worth of silver coins in 1964, they would be worth $100+, whereas $10 back then would be worth $81. So you definitely you came out ahead, but not much. When you think about it, it's really not that much of a deal. if you had taken that $10 back then and put it somewhere else, you could probably have done better than just over nearly 54 years made, I don't know, 20%. That's about all you made if you went from $80 to $100, a little more than about 25%. Not much of a gain at all. It's about 1 or 2% a year, or even less. It's like 1% or less a year. So yes, it maintained its value, but not against inflation, because the inflation rate since 1964 has been a lot higher. Although, remember, if you had just kept $10 and if you had kept the 2 rolls of coins at $10 worth of silver dimes, you'd have $107 today. If you had put those $10 bills into a safe deposit box in 1964, you'd have $10. So clearly there is some element of retention of value in silver. Clearly over paper. But not really very impressive, I would say. And that also takes into account that maybe we're at a very low price at this particular point in this particular year. But it's not like it's $17, $18. It would be much of a difference. I got one more for you. All right, let's say in 1964, what you could have done when you had a silver certificate, you could have gone into a bank in 1964 through 1968. Even though they got rid of the silver coins in 1965, you could have taken your silver certificate, gone to a bank, and they would have given you one of these guys, a Morgan silver dollar, or a Peace silver dollar, a 90% silver dollar. Now, it's always struck me as weird is that there's 72% silver in a dollar's worth of dimes, dimes, quarters, and half dollars, but there's 77% of an ounce in a silver dollar, 0.77344. Now, if you had held these, you turn in your silver dollars, silver certificates in 1964, clearly you'd be better off if you held them in this form than if you held them in the form of the silver certificates, because even though they're not really rare, I think you can buy a silver certificate for like $2 or $3, but they're not worth what a silver dollar is worth today. Now, a silver dollar today, in silver value, today is worth about $11. $11 worth of silver because it's not a full ounce. And how much is the question, is SD Bullion selling one of those silver dollars for today? Well, let's take a look. We looked at it earlier today. Give the lowest price. And they cost about $18 to $20, depending on, if you buy one of them at the lowest price, it's about $20. So you're clearly better off than holding the silver certificate in 1964, because that'll get you $2. A dollar will get you $1, and this will get you $20. But it doesn't make up much for. You do a little better, but over 50 years, it's not much of a gain. It's not much of a. So I would say it retains value, at least over the last 50 to 100 years. But the value that it retains hasn't beat inflation, because there's plenty of other items that have beaten inflation. I would say it's no different than having a house, it looks like. Maybe the house might even beat it, depending on what area you're in. So it's clearly not the same. I mean, this is my opinion, just based on these metrics that I've shown. There may be other metrics you want to raise. I haven't looked at the comments yet. But I don't see this as a... I see it as a... What I see it as there is a store of value. There's some of it there. There's clearly... It doesn't lose all of its value. It doesn't go to zero. That's clear. And it does have that speculative potential. But, as you can see, versus gold, it generally goes the other direction. And the only time it doesn't go the other direction is when silver decides to get off its beep and do a spike. But we haven't seen the spike since 2011, and before that we didn't see it since 1979 or 1980. All right, so there's the idea of silver. Now, my view, and then we'll get your views, or you probably have already put them in the comments, is that silver is a speculative metal with a limited downside, meaning that, so for example, if you're going to speculate in cryptocurrencies can go to zero and they can go to the moon. Silver probably can't go to zero and can go almost to the moon. So there's a difference. A biotech stock can go to the moon, go to zero. Cannabis stock, go to the moon, go to zero. Silver, probably could moon, but probably won't go to zero. So there is some built-in safety, but we've seen you can lose 40, 50, 60% in fiat value. We saw that, well, not 60%. We saw over the last, you might want to go back and check this. I did a video on this, but we showed the chart from 1970. There were 2 years in the last, since 1970, where the price of silver dropped more than 45%. And there were 4 years where it dropped over 35%. So you can lose significant amounts of fiat. Gold only did that once, over 30%. So yes, it can rise, but it won't go to zero. And maybe the most you can lose is half your money. But then you have to think risk reward. You know, do you buy something speculative that can go to the moon, but can also go to zero? Or do you buy something speculative that can only lose half, 60% of your money? That's really the question. Or you may believe that it is a store of value. I think if you're looking for store of value, it's gold. If you're looking for this hybrid where it's a speculative play, where you got not limited downside, but you got downside that may be somewhat controlled and that it's not going to go to zero. All right, let's take a look at what you guys think. Sure I'm not getting cut off from the live stream here. Carl Joseph DeMarco, Sofa. What is that thing with the Sofa King? Sofa King, we Todd did, something like that. Okay. This will be a good topic. Don't know the answer for sure, but I'll say over the long term it is. Well, after what I've shown, tell me if you still think that. Trace Young, silver is a speculative metal until it isn't. I don't know. I think it is definitely a speculative metal, because what's going to prove that it's not a speculative metal? It just stays where it is for another 10 years, then I would just say it's a dud. If it spikes, then it clearly is showing its speculative value. If it spikes, you know, if silver goes from $14 to $22 to $36, that's speculative. You bought at 14 and went to 32. That's a nice speculation. It would have to, I'd say today I can't call it a store of value because it hasn't been. It would have to start today. It would have to go from 14, and over the next 10 years, it would have to rise steadily versus inflation. Didn't do that the last 10, 15, 20, 30, 40, 50, 100 years. What's up, guys? Says Andrew. All right. Wish I would have bought that medical marijuana stock. Yeah, you make all your money in one day. Unbelievable. I mean, that's a ridiculous thing. $28 price. And all right. The Sofa King cheap now. That's the one, Trace. Yep. All right. Wish I would. Okay. Sofa King. Ed Mall. I bought more this week. I'm buying more tomorrow. What's up, Smoggle? Hello, Ed. Yeah, I mean, right now, it's a speculative buy. And as we mentioned, probably with that limited downside. So you're thinking now is, will it go down 40% from here? I mean, what would that be? Because in the past, that's kind of been the limit of how far it can go down. It's $14 now. If it were to go down 40%, let's see what that would be. Go down another $5, $6. So, you know, it's going to go $8 or $9. That'd be your downside if you bought today. That's historically. I'm not saying that is your downside, but historically, over the last 50, 100 years, that would be your downside, that it goes to $8 or $9. What's your upside? Well, $50 is where it's last been. So if 50 to 14 to 50, that's it's nearly a 4-bagger. It's 3.5 times the price. So that's exactly that. To me, looking at silver at this price, in my mind, makes it historically definitely not a store of value, but historically perhaps a speculative buy at this point. This isn't investment advice. I'm not putting a speculative buy on it. I'm just saying if you look at past history, where it is, forget the gold-silver ratio. I don't think that's anything to do with it. $14 could be a speculative buy. All right. A voice nen dether. You should divide that long-term silver chart into dollar currency regimes. Yes, we have done that in the past. We've been in different currency regimes since 1971, for example. Here's the thing. I hope I don't pronounce your name incorrectly. I'll just call you Mr. Dether. From 1934 to 1971, and a little bit past that, the price of gold was fixed. So when you do a gold-silver ratio, it's irrelevant there because the price of gold was not allowed to rise even during the inflationary 60s and early 70s, whereas silver was free-floating. So you didn't have an apples-to-apples in the 1934 to 1971 through the Bretton Woods era. Okay, then, as you say, if you were to take it from 1971, which we've done, that's when it actually shows that gold has outperformed silver by a wide margin since 1974. Once they allowed Americans to legally own gold in 1974, the gold-silver ratio never got anywhere near where... In fact, it had been really high in the 30s. It had been like 100 to 1. But in the late 60s, early 70s, the gold-silver ratio did come down into the 30s and the 20s. But that was because gold hadn't risen for 40 years. Once they untethered gold and they allowed the price of gold to go higher, the average gold-silver ratio since 1974 has been about 56-60 to 1. All right. Pay to win. Just got some today with eBucks Pay first. All right. When will they run another promo? Do you get eBay bucks by? I don't know anything about eBay. Sometimes I wonder why I stack silver all. I see the price drop and I buy more. Am I nuts? No, not. It depends on why you buy. You know, that's how I look at it. Is if you're buying, see, if you're buying for speculation, then it makes sense. But then you have to ask yourself, are you really that convinced? See, when you usually the speculative portion of your portfolio is not 100%. It's not 80%. It's not 50%. I'm not an investment advisor, but I've seen portfolios. They say your speculative percentage of your portfolio, depending on your age, you know, it's usually 10% or less. I think people have this mentality. They buy silver, they think it's going to moon and it's guaranteed, or somehow they think it's a sure bet and it's solid. That may be your view going forward, but if you look at history, it's been anything but that. It's been a spike and dive commodity for 150 years, and it really hasn't held value. So it's really been, historically, a speculative investment. It's not been one where you park your money. I think it's a lot of the silver channels since 2009 have promoted silver as being somehow so undervalued, and it's like the next best thing to gold. Some even say it's better than gold, and I don't know, historically, and I mean not even recent history, and then more recent history, and then go back even further. To me, it's always been speculation. It hasn't shown to be historically a real good store of wealth. It's nothing like gold. Yes, we were under a different currency regime from 48 to 71 Bretton Woods. Actually, it's 1944 was the Bretton Woods agreements, but you're right. Ed Mall sold it all in 2003 to 2008 and sold in 2001 at 45 an ounce. Well, then, yes, but that's you. That's your trading as the hedge. People say they're just going to buy it, stack it, forget about it, and think that when they come back like Rick Van Winkle 20 years later, they've stored their wealth. No. Yes, better than if you would just put the dollar bills somewhere. But if you would put it in other assets that appreciate, no. That's shown over the time. So if you trade silver, you can make a lot of money. Maybe just buy the marijuana. I don't know how long that stores, but that might be another. But then you have legal risk and you have, who knows. I'm doing it again, says Ed Mall. I'm listening. Trace, I wonder if the price of silver is being repressed somehow. That's possible, and there's a reason to suppress silver, just as there's a reason to suppress all commodities, just because the world runs on commodities. It doesn't really do anyone any good if the price of copper skyrockets or nickel, and that would just raise the prices of everything, the finished goods. I think that the silver and gold, though, are repressed because they want to discourage hoarding. And the way you discourage hoarding is by smashing the price down and make people realize, nah, it's not worth it. I'm not going to do it. And by that way, they can then free up the silver industry. That was the rationale behind Kennedy and Johnson wanting to demonetize silver. Kennedy had a quote that he made to Congress. He said, besides its uses in coins, silver serves no monetary function. And he was basically saying that, at least then he thought, well, we can at least use it for coins. But he thought, it was the first Democrat in like 100 years to break from the silver Democrats and even try to... The Democrats always wanted to make silver a part of the monetary system because it was inflationary. It wasn't stable like gold. And the Republicans, the big city Republicans, always wanted to have just a gold standard. There was always this compromise to keep silver in the system. Kennedy wanted it out. And then Kennedy, they eventually got the silver out of the coins. And they both said that silver is needed for industry. They were talking about a shortage. Because at the time, every major nation, United States, Canada, Australia, Italy, France, India, China, they all had silver coinage circulating. You talk about 47 million American Silver Eagles sold in a year is a big deal. U.S. Mint used 550 million ounces just in 1964, and all the countries using. So a lot of that silver was not available for industry. So that's why I repress it. They don't want people to think of it as money, as a store of value. And then maybe, for whatever reason, over the last 150 years, whatever the reason, it hasn't been a store of value. It could be because of manipulation. But then my question has been, why do you think that's going to change? Why would that change if that's the way of the world, if they've dissuaded so many people from it? And it's used in industry, and it is out of the coin, so that demand is gone. Why would that change? Texas milk is $1.50 today. Well, that's good. See, that's the other thing about pay to win, about milk, eggs, anything. They're priced differently around the world, even gas. But yet, gold and silver are priced the same pretty much all over the world. So that answers Trace's question. There clearly is a repression element, because why would anything be the same price? Nothing else is the same price all over the world. So that's clearly a way of keeping the price down. But you know, there's an old expression, you don't fight City Hall, don't fight the Fed. I mean, the reason you want these things to go up is because you want more fiat purchasing power, so you can buy stuff, invest stuff, save, you know. The sofa thing. No, it was the sofa king, Carl Joseph DeMarco, not the sofa thing. Edmond, buy low, sell. When it pops, it's not hard. Yeah, if you've got the time to wait it out, that's what historically it looks like silver does. Spikes and dives. Carl Joseph, you need to normalize the price of silver by its open interest. Yeah, I remember gas at 17 cents in 1962, says Bogus Fiat. Yeah, I don't remember it that low. I remember it before it spiked in the 70s. It was like 30, 35 cents. It was such a big deal to see 75 cents. I remember that. Sean Saylor is here. And silver's been losing its value since ancient Roman times and continues to do so. Dether, 1984 world demand, 60 million barrels a day, now 98 million barrels a day. Anybody know the worldwide demand for silver did in the same period? Trying to think of the numbers I've seen. So in 1984, you did not have nations requiring silver for their coinage. So that demand was gone. There was very little investment demand before 2005 in the United States and globally. And before 2005, and even before then, there wasn't much Indian or Chinese demand because they didn't have the money for it back then for investment demand. I would say that silver demand has increased. You're seeing 60 to 90. It's about a third of an increase, or 50% increase. I would say silver demand has gone up even more since 1984. I'm going to guess it was about 384. I think I saw this the other day. For some reason, I was doing research. Yeah, I think when Warren Buffett bought his silver, I think the demand was about 480, 500 million ounces, and now it's about 800. Nah, it's about the same, maybe. Yeah. I don't know. We'll have to check. But it's a good correlation to know. Nomadic Giant is in the house. All right. Trace, wasn't silver $1.50 in 1970? I'm not going to look it up now, but that's possible. That's very possible where it was. And gold was $35 an ounce. Elliot Finesse, old money, oil, tobacco, and silver. New money, marijuana stocks, crypto, and silver. Well, that's an interesting portfolio there. Although I would say marijuana stocks and crypto may have, they have really spiked. And even though crypto's come down, it's still ridiculously high. Silver is not in its spike mode right now. Just go back 1 year, 1978, silver was $5.50. Start the comparison, 77 misleading in my opinion. That is correct. But remember, I can do that also I did it from 1964 too. And so if you bought, well, let's say you did buy it at $5 in, I'll do it right now, in 1977, 1976, something like that. Let's say $5.50. Okay, we're at 14.30 minus 5. 14.30 minus 5.50. Okay, it's an $8 gain. Divided by 5.5. That's 160% gain since let's say 78. To 40 years. So divided by 40, less than 4% a year. So even at $5.50, if you bought all your silver at $5.50 and you held on to it from 1978 through now, your $5.50 silver trace is worth $14.32 or 140% gain, which is, that's not much to write home about. It's below the inflation rate since 1978. In fact, I'm going to give you, this is the CPI inflation calendar. Okay, so let's see if I'm going to tuck it into the inflation calendar. 1978, at $100 then. Yeah, so if I had $100 in 1978, that's worth $400 today. That's a 4-time increase in inflation. In your example, at $5.50 trace, going to 14, that's a 160% increase. So the inflation rate was 400%, and your silver only rose 160%, even at $5.50. So that, that kind of shows you, unless I'm missing something, that silver has not been an inflation hedge. All right, and if I went back 1 year in gold, and let's say I got it from my 250, right? So my 1200 minus, let's say I got it at 300, 900 divided by 300. That's like a 300% gain right there. All right, invest Bitcoin. Tom Manley's here. Hello, Tom. Should I sell my stack and buy coin? Who knows? Dogecoin. That thing, I don't know. They made that as a joke, but it's had some interesting spikes. All right. I'll trade my stack for one Dogecoin. I think a Dogecoin is less than a dime, or even less than a penny. Our wages did not keep up with silver. Yeah, I don't know about that. Depends on when you start. I remember when a pre-1965 dime could buy a big old candy bar, a good-sized bag of potato chips. With a post-1964 dime, you need at least 13 dimes to make the same purchase. That's correct. That's exactly what we're talking about, is that the you retain some of your value. Obviously, if you just had a dime, and if you kept the 1964 dime and a clad dime the next year, 1965, you clearly would be better off if you just put both of those in a safe deposit box. You can come out today and you could probably get something close to potato chips. The other dime would have lost, all that value. But what we're talking about is, you go back to that time period, if you put your money in something else, you could have outrun inflation, whereas silver, it's very close. And the examples that I gave, it depends on when you bought, you didn't definitely beat inflation in all circumstances, depending on when you bought silver. That's what I think is clear. You could put time periods when you do. And one I gave where you actually came out ahead is in 1964, if gas was 30 cents and you had a dime and a quarter today, 90% silver, you can get gas for 30 cents for that stuff. So there are examples of it, but it depends on when you bought it. What backs up Bitcoin? Well, it's a payment network. That's actually what it is. It's not backed by any intrinsic anything. Andrew, you think the power involved to mine Bitcoin is what backs Bitcoin? That's like saying that, and some people believe this, and I'm not disagreeing, but they say that the mining costs of gold and silver back the price of gold and silver. I'm not sure in either case I think it's partially true. I don't think it's 100% true. It's not just U.S., it's worldwide. Inflation is the evil beast in the room, says Tom Manley. Bingo. Trace Young says, I remember when he said that, my grandparents immediately started hoarding. Yeah, even back then, people had a very healthy distrust in what these people said. I remember when the Tooth Fairy says, Elliot Finesse used to leave a silver $50 under your pillow, but now today she'll leave a generic copper round. Yeah. Was pulling silver out of circulation at face value the good old days, yeah. Or plated zinc under your pillow. Oh, we got a lot more questions here. We'll try to get through them. Or comments. Oh, wow. American Super Trend. Remember as a child going trick-or-treating, there was an elderly couple who would give out times and not candy. Times? Dimes. Dimes, not candy. Yes. Tom Manley. I plate my bolts and nuts I use restoring modeling car. I use zinc to coat them for rust prevention. What about zinc pennies? 1943. Elliot Finesse. Dan, we must have grew up in the same neighborhood. I trick-or-treated at that house a dozen times. But there was trick-or-treat for UNICEF. I don't know if they still have that. You had that little orange box the teachers made you go out. And I used to forget to do it. I used to shake the box. We need a silver run. No way it's going to $7 an ounce. No, because it's already, actually, when I said it would go down 48%, it's already down 25%. So really, if it were to go down from its most recent peak, you're talking about $11 or $12 if it goes down. All right, go for sell cure. Elliot Finesse, if silver goes to $7 an ounce, that would be great for all us to neutralize the losses if we buy. Yeah, I'm wondering if it taps 9 myself. If silver drops to 9, then Mint could churn out 10% silver dollars. Yeah. Nathan Chandler, I feel like the real question is silver really an asset or just a commodity? You know, someone the other day told me, well, you left out commodity. You said to me, we asked if gold was money, insurance, and hedge, an asset or an investment, and someone said it's a commodity. Now, silver is clearly more of a commodity than gold, at least an industrial commodity. But a commodity is also an asset. If you own something, you hold on to it, it's an asset. So I would say silver is an asset. I would say it's a speculative asset. And it is clearly a commodity to be used in industry. Silver can't go below zero. No, that actually it could. Theoretically, if you had a cost of storage that was higher than the value of the silver, then you could conceivably say it's worth less than its intrinsic value. Actually, I'm being convinced more and more that small but regular purchases of gold over the long term is the best approach to stability. In the long term, saving 20% would be about right. Well, I did a chart just showing even since just the last 10 years, and you could do it from longer, but you didn't lose any money if you bought at the average price of gold over the last, I think, 11 years, including buying in, $1,700, $1,800. The average price over the last 11 years is about $1,200. Now, you would still have, I think it was about 5-6% higher than, it got up about 5 or 6% over the last years, but the inflation would have eaten away your gains. So you might have lost a little against the dollar in gold, but you clearly lost a sizable amount of money against the dollar the last 10, 11 years if you bought the average price every year. But then again, the other thing that we're thinking in dollars, which makes sense if you live in dollars, but the the time to buy any of these assets or before the currency has an issue. I think what's been oversold and overstated by the pumping community is that somehow the dollar was at imminent risk. And I believe that might have been the case up to about 2013. But clearly, as we've seen, there's other countries that are far worse off than the U.S. And China, I have anyone who thinks China's on solid ground because they might have 20, 30,000 ounces of gold, they're out of their minds, because China is just, right now they don't know what to do, so they're gonna build more infrastructure. They're gonna borrow more money. That is a huge debt monster with a massive debt to GDP. Japan, European Union, all these countries are think of what the Fed's done the last 5 years. I'm no fan of the Fed, but they have raised interest rates to almost 2%. They have sold off their balance sheet. What are the other central banks doing? They're borrowing like mad. They're printing money. They're doing QE. They got negative interest rates, zero interest rates. The dollar is, eventually, as they say, all these fiat currencies will go away. But the idea that the dollar was at imminent risk, I don't know. There's other ones that are closer. But the key is to have your hard assets in advance before the currency collapses. And then again, you don't really make any money. You just don't lose any value. That's what generally happens. All right. Have a look at the silver chart again regarding that price level. I think it was a big demand level. Gold is where you park your money. Silver is play money. That makes sense. That's my point. It sounds like, at least what I've seen, just these numbers that I looked at, I'm welcome to look at others, that silver is speculative and gold is more stable. What are your thoughts on a Dow silver ratio as libertarian runner? You know, I have a chart on that I keep. I should publish that. Yeah, maybe a topic for another night. Could be a speculation indicator. In fact, I know where it is. I have it at the ready. Give you a quick treat. I'll give you the Dow Jones, the Dow gold ratio. Take a little longer to find the silver Dow ratio. I even have a blog post on it, but I can pull this one up pretty quickly and show you this one since 2015. This is the Dow Jones versus the gold. And the Dow has done okay. Dow versus gold. September. Let's see if that comes up. There are periods of time just in the last few years that the Dow was being beat by gold. Not so much silver, though. Let's see what I got here. Dow versus gold. Oh, where did I put it? I think it's here. There it is. Okay, here it comes. Here's your Dow versus gold. You can make the same argument, I suppose, for the speculation ratio here, libertarian runner. When you see the chart, should be coming up in a flash. I see it on my screen, and it should be up on yours in a minute. By peaks. And there it is. You can see on the Dow chart, the yellow line is gold, and the black line is the Dow. And you can see most of 2016 was a nice year. That was the Brexit year. It outperformed. We're even outperforming this year. It's only in the last 3 months that we've lost the course. We've lost the battle. So, you can argue there's a chance. I would say the Dow gold ratio is more relevant than the gold silver ratio, because it seems that when the Dow goes up, the gold goes down, and vice versa. Somewhat of a correlation. I don't think the gold silver ratio is, I don't know. I don't put much stock in that ratio. All right. Other questions that we got. Elliot Finesse. Silver is the asset that kicks in when fiat adjusts negatively to keep you afloat while protecting other assets in a balanced portfolio. Alan Wheeler is here, and he's Sobor today. S-O-B-O-R. LOL. Gold is the major, singles the single. That makes sense. Baseball terms. Oh, single A. Yes, gold is the major, silver is single A, and the silver could move to double A or triple A. That's correct. Yep. I like that. Got my dimes in the mail today, says Alan Wheeler. By the way, if you are interested in buying precious metals, you can comparison shop on the Small Gold site or below these BitChutes and YouTubes. I do get a small commission. It's not investment advice, but I have SD Bullion, Golden Eagle Coin, and SD Bullion, Golden Eagle Coin, and Money Metals Exchange. So you could check them out and see which one. The key to comparison shopping is the shipping, because you and then whether you pay by check or Bitcoin or credit card, they all have different prices and they all have different deals. So it does make sense. You just fill up three. You buy what you want, fill up three carts, and then you see which one is the best price. Premium silver coins are too expensive where spot is. We know the latest one that came out, I was looking at, is this Tesla coin, APMEX has. It's $29 though. I mean, if you're paying more than twice the price of silver, I wouldn't do that. All right. I don't think, but the US dollar seems to be the, yeah, that's the point. The US dollar is the linchpin of the whole economic system, and all the other countries have an interest in keeping it propped up. Even if they're against the US, they know that they'd be biting their nose to spite their face. And so the dollar is the last one to go, I believe. High is better than drunk on those cannabis stocks. This is probably the most intelligent hour you can spend on the internet. This is not me. Well, thank you very much. It's not because I'm intelligent. I think it's because the commentators are intelligent, and also because I'm not trying to pump anything here. I'm just trying to analyze whether these things make sense, what makes sense. If there's something positive to say about gold or silver, I'll say it. I don't even think what I'm saying is negative about gold and silver. I'm just pointing out that historically, at least what we looked at tonight, silver is not a big store of value. It hasn't been. It's been a speculative metal. Nothing wrong with that, but I think it's been oversold as a store of value, and I think it's been oversold as set to skyrocket. Because it's been set to skyrocket for the last 7-8 years. There's always some headline, set to skyrocket. And, just like we saw with gold, game changer. There's always some story. I mean, I look at it as silver can pop at any moment, and gold does what it does when it needs to do it. It tries to stay ahead of inflation. I don't get too excited about either of them. All right. Well, thank you very much for listening, and please remember to subscribe to this channel. Go over to BitChute and subscribe. Small Gold's on Minds, Gab, Twitter, Facebook, and the best place of all, smallgold.com. You can subscribe there for free as well. Thank you very much, and we will tomorrow night, every night, 8 o'clock, Monday through Monday, Eastern Standard Time. Thanks a lot, everyone. Alan Wheeler says, those mugs, though, you got to get your mugs. Smallgold.com. Thanks, everyone. Good night.